Time now for today's Market Movers with easy-to-follow futures and options trades.
Welcome to Market Movers. I'm Jim Urio, and today we're discussing the stock market. Specifically, what will the major drivers be over the rest of the year? Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Okay, we have rate policy. We have Washington dysfunction. We have the potential for Washington pro-growth policies. We have earnings. We have the economy. What are the major drivers for the rest of the year?
Goodness. Excuse me if I went cross-eyed there for a second. Good delivery, by the way. You got them all out of there. I'll tell you what's interesting. It's all five, and I'm not trying to be sheepish in my response. If I had to put one higher than the others, I would say it's earnings, because if you look at the surprisingly good earnings season we just got through in the ES, that to me is what pushed prices mostly higher.
I mildly agree with you. I think I put earnings as number two, and both earnings and revenue growth has been good, but I still think it's rate policy. The three major central banks continue to make money easy, and it continues to show up in the stock market.
And that helps with borrowing costs, too, on some of the major S&P 500 companies. Low borrowing costs to fund future growth is obviously a big player.
And low borrowing costs to buy back their own shares. Now, before we dive into our trade discussion, I'd like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to either manage risk or create additional trade opportunities, not as recommendations or advice. Prices and movements are going to vary. When we priced this out, it was the D's contract we're looking at, because that's the underlying. It's trading about 24.41. Scott.
So the great thing about being in the markets today when volatility ticks up is you can have an opinion going into a trade expression that you want to have on potentially, and then you open up the books and say, well, there's actually value on the other side potentially. So that's what actually I'm getting into today, Jim, specifically looking at buying the week 3 October 2420 2400 put spread in the ES for 7 ticks. This trade expires October 20th. It has the underlying currently at 2441, so it's going to risk 350 to make a potential 650, which I believe is a fair risk reward to put on, my friend, given all the volatility that's ticking up and the fact that maybe just putting on a little bit of cheap, at least appropriately priced protection is a good thing for your portfolio.
I actually think the risk reward on that trade looks attractive. I like this. When we're talking right now, the VIX is trading between 14 and 16. It is, wildly more inflated than it was just a couple weeks ago. So I like that you're buying a put and selling a put instead of just buying a put, because I think that'd be too expensive. But as is usually the case, I'm slightly more bullish than you are. I'm looking at buying the week 3 October 2500 2525 call spread for 7.5 ticks. This trade also goes out October 20th. 2441 is the underlying. Risk 375 to make a potential 900.
Favorable risk reward, and also thank you for staying the same after all these years, Mr. Bull, which has been a pretty good expression, I think, so far in a lot of these shows. But it's looking at how this fits in with respect to both of these trades and how it doesn't exactly have to totally fill out either. There's a good enough risk reward potential there, or if it starts to fill out somewhat for you on either one of those sides, you can manage the risk within that and even take some of the profits that you may make without it totally filling out.
Last question. Rates was my number one thing. Will rates stay low?
I believe they're going to stay low, but I think the Fed is still going to kick one more in the bucket by the end of the year, which they're allowed to do because they have the room to do so. I don't believe that's going to create a major market reaction.
I think they've prepped us for that. I think they'll do that as well. Thank you for joining us on Market Movers. I'm Jim Urio, where we are helping to make you a better trader.